Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Godkin, I'm a journalist, and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, the pandemic has been a boon for fintech and digital finance, but it's also been a pretty good time for fraudsters and money launderers. Never before have there been so many ways to commit financial crime, which is where anti-AML fintech ComplyAdvantage comes in. The company's founder and CEO is Charles Delingpole, who joins me now.
It's awesome to be here with you, Elliot.
So ComplyAdvantage, it's about helping financial crime fighters crack down on money laundering. Is that the big picture?
Exactly. So as we know, every year, many different firms are fined billions of dollars, and also there are all kinds of cartels or terrorist groups who are laundering money and sending money, and ComplyAdvantage was set up to try and prevent that from happening. So what we've done is build Comply Data, which is a kind of linked knowledge graph of hundreds of millions of people, companies, facts, which can help you understand the risk of the customers and counterparties that you're dealing with.
And you're mainly working with banks, with fintechs, but also with governments and regulators too?
Exactly. So we work with 1,000+ clients directly, and also via partners and resellers in 80+ countries across banking, fintech, payments, investment. Every single regulated company in the whole world should be a client.
Well, perhaps there will be one day. And in terms of traction, can you give us a sense of, revenues and growth and number of customers and the like?
So we raised our $70 million Series C with $20 million from Goldman Sachs a few weeks ago. We're now 300+ people, which is mainly engineers. We've got teams in New York, Singapore, and London. And in terms of traction and growth, we're growing very rapidly right now. We've had huge demand for the new products, and we're very excited for the new products around KYB, business data, and AML screening.
Right, and we know, because we speak about this almost every week on the podcast, that the pandemic was a massive boon to fintechs for the most part, and also digital finance. Did fraudsters and money launderers go more digital too? Were they just kind of following the money and going online and committing their frauds and money laundering more kind of, online?
So I think there's two different dynamics. Firstly, there's the kind of wholesale transfer of state balance sheets to consumers and businesses as a part of the payment protection program insurance schemes. And what you saw there is many fintechs being used as conduits for the government. And because fintechs are online, it's much easier for people to do it from home, but also it's much easier for fraudsters to steal industrial quantities of money. The second dynamic is that because the traditional routes of commingling, say, heroin and coke with people traveling on airplanes, because the routes are now shut down, as in we're unable to go to the US. People have to find other ways to transport those kind of drugs and other mechanisms. And that could be through trade-based money laundering, or I think what we've seen in the UK recently is drugs being dropped offshore and then washing up on the beach. So I think everyone from fintechs to consumers to cartel members have had to adapt to the new regime.
Right, and you mentioned Goldman Sachs and the money that you recently raised. What comes next for ComplyAdvantage? Where are we going to see the company in the next year or over the next 5 years?
So the foundational vision for the company was around this Comply Data database. So that's kind of a database that every person, company in the world, but then also importantly, the linkages between them. So what we added last month was a database of 400 million companies and directors, shareholders, and that's all interwoven and interlinked with the high-risk database of sanctioned entities, politically exposed persons, adverse media, and warnings. So now when you onboard a company, you're able to see actually this person who's a director of the company is politically exposed and has been involved in a corruption scandal, or this company in Alaska is linked to a Mexican cartel, and nature of business isn't in fact a media company. They're a pornography and human trafficking group. I think the people we're bringing on are really developing and iterating and enhancing this data set. And the vision for the company is to make that the single global database that every fintech and regulator and rated company across the whole world uses. Because as you've just discussed, these kind of crimes and terrorist groups and risks are by their very nature global, and therefore you need a massive global database which is capable both technically and operationally of solving those problems.
Right. Now, that's a bit about ComplyAdvantage, but your CV is also pretty interesting. I mean, I think we can safely describe you as a serial entrepreneur. This is your third startup. I think you actually did have a day job for a little bit, but then it was straight into entrepreneurship. Maybe you can tell us a little bit about your background, how you got there.
I learned how to code and built my first company when I was 16, and I guess I realized that I had a lot to learn, and therefore I did 4 years JP Morgan TMT M&A, so worked with the biggest software companies and credit data firms and B2B data firms, similar to the ones in our space. And that's really how I got the idea for ComplyAdvantage. So when I was running market finance, I was the person that would have gone to jail had something gone wrong. So having been running a fintech compliance team, I knew that was the bit that I hated the most. And so really, from what I saw about the industry in terms of the failure to solve money laundering and also the operational burden that fintechs have as well, it was the fusion of those two issues with new technology around AI, machine learning, which made this possible.
And was it always the plan? I mean, as you say, you started your first company, I think the Student Room, I think it was called, when you were 16. Was it always the plan to be an entrepreneur, to just kind of learn the ropes perhaps at JP Morgan or an investment bank and then just go off on your own and set up your own thing?
So I think probably the reason why most people start their own companies at the FinTech Forum is because I think if you get a great idea and great people, particularly now, you can raise lots of money to build something awesome. And I think building a company is really a vehicle to solving some of those pressing issues that the world has. So I think for me, it was a great opportunity to really build an amazing team to solve a challenging problem, but using technology which had only just developed. And I think as we broaden and enhance and deepen the data we have, I think we'll make more and more of an impact on terrorist financing, money laundering, and also the operational overhead that fintechs have, because that's just so huge in terms of not only the psychological risk of going to jail, but also the kind of burden of onboarding clients slowly. And hopefully, as we make more progress towards that, that will really help fintech companies.
But in terms of what shaped you and perhaps set you on your path to where you are today, I think you were one of 7 siblings. I mean, did your family life, did that perhaps inspire you to kind of, set yourself apart and go off on your own, do your own thing to kind of, in order to be, I don't know, noticed or whatever?
Yeah, so I think I was one of 7. I was youngest of 7. And I guess my father had a company which collapsed when I was like 6. And I think whereas everyone else had the benefit of that, I didn't. So I think on the one hand, I couldn't afford to be a kind of journalist or an artist or like the rest were. And so I think I had to work and build a company to kind of get back what we lost, I guess.
Right. I mean, how traumatic was that when, I mean, can you recall kind of the impact that it had on you and your family?
Yeah, I think we're kind of very well off before that happened, right? And I don't think we necessarily lost the kind of tastes or spending abilities that having a company necessarily had. And I think hopefully this is the kind of business which can scale and I think help everyone in terms of the investors and the employees and the customers simultaneously, rather than being something that kind of collapses overnight.
Right. Okay, well, look, Charles, don't go away because we're going to take a very quick break, after which we're going to continue our conversation with ComplyAdvantage founder and CEO, Charles Delingpole. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Charles, I've got a few more questions for you about the sector in general. We've been seeing in 2021, with the Biden presidency, the possibility of the nuclear deal with Iran coming back into being. Is that something that's going to impact businesses? Will they be more free to do business with Iran, and they won't have to worry about a whole big, dollop of compliance that they've had to be doing in order to not fall foul of US sanctions? Or is it just going to be business as usual for them, and they still need to be very worried?
So I think what we've seen recently is the kind of wholesale blocking and exclusion of Iran from the global financial system. I think even if there wasn't a rapprochement, there would still be vast swathes of the economy linked to the IRGC and the different overseas interests of Iran and Hezbollah in Syria and Iran's interface with Iraq and elsewhere. So I think even if you see the wholesale exclusion of Iran, then there'll still be different mechanisms that the US will use to exclude vast swathes of the economy. I think you've also seen the EU have attempted to block the EU, to block the US sanctions on Iran. That hasn't been successful because the different mechanisms that they've designed, which are then being replicated by the Chinese government in Hong Kong, haven't been effective. So I think just because the Iran situation has some sort of rapprochement doesn't necessarily mean that will be the end of the different mitigations that fintechs have to have in place. Simply, it'll mean the transfer of country risk to entity risk.
Okay, and cryptocurrencies are obviously been, whether as investments or as ways to launder money, have been in the news quite a bit of late. How much easier is it for financial criminals to launder money using crypto, and how much harder is it for financial crime fighters, even using technologies such as ComplyAdvantages, to track them down and ensure and to kind of clamp down on money launderers?
So I think if you want two events which kind of indicate how easy it is for crypto firms to be exploited by money launderers and criminals, then you can look at, say, the Continental Pipeline ransomware attack, and you can look at the Capitol protest. So I think in the Capitol protest, you saw a French national who had sent lots of Bitcoin to various prominent right-wing entities, and that was then disclosed. Similarly, you saw with the Continental Pipeline ransomware attack, lots of money being sent to the hackers themselves. And those are the two issues that we know about, whereas actually there are probably thousands and thousands elsewhere. You still have deep structural flaws in the way that crypto is regulated. You have unhosted wallets, which are according to Janet Yellen, the equivalent of Swiss unknown bank accounts. Whilst you can put in place things like entity screening and transaction monitoring, fundamentally, the travel rule, as demanded by the Financial Action Task Force, hasn't been implemented, and therefore you still have deep structural flaws, and this will have to evolve for crypto to be considered safe by the normal banking system itself.
Right, but even using, there's been a lot of talk about, I think, Monero as being kind of, almost undetectable. Is it fair to say that there are ways, even if someone's using your technology, that there are simply things that you cannot track and you cannot monitor and you cannot find?
So altcoins like Monero were explicitly designed to be privacy coins, and lots of people said early on that if there are any coins that do well, it'll be those explicitly used for money laundering and terrorist financing, because there's obviously demand for that. So I think the teams who created those are now attempting to create other altcoins that have built-in compliant procedures, which make it far less risky for regulators and societies to host those currencies. I think definitely we aren't at the end of the innovation, and there's probably a good 5-10 more years where it'll radically shift as well. So I think you've seen DeFi and all kinds of changes in the past year. We're still at that phase of intense innovation, and there are obvious structural flaws in crypto which have to be remedied for it to be considered safe.
Okay, well, watch this space. So look, I'm afraid we are out of time though, Charles. So just really want to thank you for taking the time to speak to us today. Charles Delingpole, founder and CEO of ComplyAdvantage. Thank you. And I'll be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Programme via www.parisfintechforum.com. Hope to see you next time. Bye-bye.